Introduction to financial statements. Write this down. Financial statements is considered as output of accounting system. Output of accounting system.
Sir, can you please repeat
Yeah,
it?
financial statements considered as output of accounting system. Output of accounting system. Okay, it has two components. Has two components. Has two components. Number one, profit or loss statement. Profit or loss statement. Number two, statement of financial position. Number two, statement of financial position. Statement of financial position. And then write it down. Topic, profit or loss statement. Profit or loss statement. Write this down. This shows the performance of a given business entity. It shows the performance of a given business entity for a given period. For a given period. It may be a month or a quarter. It may be a month or a quarter, or for a given year. Or for a given year. Or for a given year. In profit or loss statements, two types of profits will be calculated. Two types of profits will be calculated. Number one, gross profit. Number two, net profit. Number one, gross profit. Number two, net. Just write down the formula. How you calculate gross profit? Sales minus cost of sales. Sales minus cost of sales. Sales minus cost of sales.
Sir, could you please repeat the formula?
Yeah. Gross profit equal sales minus cost of sales. Gross profit equal sales minus cost of sales. Can you see the both screen?
Yes, sir.
So gross profit equals sales minus cost of sales. And next, write it down. Sales equal cash sales plus credit sales. Cash sales plus credit sales. This is a cost of sales formula. Okay? Opening stocks plus purchases plus loading expenses plus carriage inwards. මේ හතරම එකතු වුණාම තමයි එන්නේ we call cost of goods available for sales. Cost of goods available for sale. Taking U minus closing stocks. And you calculate the cost of sales. Clear? और copy करेगा Mihansa, can you read the first, start from the beginning, the textbook?
Introduction to financial statements. In the accounting process, the business transactions are first recorded into the prime books and then posted into the ledger accounts. Then the ledger accounts are balanced and taken into the trial balance. This process has already been discussed in detail in the grade 10 study text. The objective of any business is to earn profits from their business activities. Therefore, it is worthwhile to see whether there is an adequate operational profit to continue the business. Also, it is important to see the financial position of the business reflected through the assets, equity, and liabilities. Such information assists in making decisions for the future of the business. Accordingly, to obtain an understanding on the financial performance of the business during a specific period and the financial position as at a particular date of the business, the financial statements need to be prepared. The financial statements are prepared to identify the operational result and the financial position of the business. Financial statements of the business are prepared for specified period of time. This is known as the accounting period, and it is generally considered as 12 months period of time. The financial statements are regarded as the output of the accounting process.
Right, okay. I'll give you just brief. We start with the transaction. There are various types of transaction. You have credit sales, cash sales, credit purchases, cash purchases, purchase of non-current assets. So based on this nature of the transactions, we derive various prime entry books. Starting from cash book, all cash receipts and all cash payments will be recorded in cash book. You have petty cash payments, which will be recorded in petty cash book. You have credit sales that will be recorded in sales journal. You have credit purchases that will be recorded in purchase journal. So any other transactions, let's say, for example, purchase of non-current assets on credit. So goods drawn by the owner, or let's say any sort of adjustments to financial statements, correction of errors will be recorded in general journal. So general journal, you have a supporting documents, journal voucher. So based on these prime entry books, and you take them down after recording them, you need to copy that to the ledger accounts. So you prepare ledger accounts and you take the closing balance of each ledger accounts into a list. So that list is called the trial balance. So in trial balance, you have two columns, credit column and the debit column. So all assets, expenses, drawings will be recorded in debit side, debit column. And the remaining items such as equity, basically the drawings, equity items like, let's say, capital, revenue, and liability items will be recorded in income items recorded in the credit side. So that's covers the initial part, the recording part. And then from the trial balance, you need to prepare two financial statements, the two components of financial statements. They are profit or loss statement and statement of financial position. So profit and loss statement indicate karanne just to see whether the business is earned any profit or incur any losses. So if your revenue is more than the expenses, you come up with a profit. The other way around, it's a loss. Clear? Right. I'll ask Sinuti to read the next part, financial statement.
Financial statements are prepared for various business organizations. This chapter focuses only on preparing the financial statements for a sole operator or sole trader type of business organization. The sole operator business prepares two main functional financial statements to ascertain the operational results and financial position for a given accounting period as follows. Profit or loss statement, statement of financial position. Profit or loss statement. Profit or loss statement is prepared by a business organization to calculate the profit or loss earned during a particular accounting period. This statement was also known as the statement of income in the past, but now it is known as the profit or loss statement. Calculation of profit or loss of a business is performed in two steps: calculation of gross profit, calculation of net profit. Calculation of gross profit. The gross profit is calculated by deducting the cost of sales from the sales revenue. Sales revenue. The total of cash sales and credit sales done during a particular accounting period is known as sales revenue. Cash sales 58,000, credit sales 76,000,
So sales revenue comprises two elements: cash sales plus credit sales. Okay, right. Go ahead. Yeah.
Cost of sales. Once the entire stock is sold out, the cost of inventories that was presented for the trade is considered as the cost of sales. But a business organization can have some inventories yet to be sold at the end of an accounting period. In such situations, the cost of sales is calculated by deducting the value of the closing stock from the cost of the goods that were presented for sales. When preparing the financial statements, the closing stock remaining at the end of the accounting period is considered as an asset, and it becomes the opening stock of the next accounting period. Example, the same closing stock as at 31st December 2015 becomes the opening stock as at 1st January 2016, the next accounting period. There is no opening stock exists for a business in its first year of operation. In a particular accounting period, a business has to purchase goods to sell, as the opening stock of goods is not adequate for the sales to be done during the year. The purchases made in terms of cash and credit totals for the purchases made during the accounting period.
Right. So here in this example, they say purchases has two elements like sales, cash purchases and credit purchases. So that take the total value of purchases, and then you need to take the transportation expenses, loading, unloading has to be incurred when purchasing goods are transported to the business premises. In order to obtain the total cost of inventories, all expenses relating to purchases, including the cost incurred in bringing the stocks into the current position and condition, need to be considered. Right. So purchases plus loading plus carriage inwards. So those are called purchase related expenses. So, so just have a look how they figure out the cost of sales. All okay with the calculation part? Examples, please have a look. If you have a doubt, please ask. And this is very important topic. Yeah. Clear how you calculate the cost of sales?
Yes, sir.
Good. So now it comes to the gross profit. Gross profit is the difference between sales revenue minus and the cost of sales. And please read the example and see whether you can understand. Is refer the template they have given. You have two columns. Sales goes to the second column, and cost of sales part, opening stocks, purchases, carriage inwards, loading expenses. That take the total that we call cost of goods to be sold, taking up closing stocks. And then you get the answer to the next side, second column, and then you come up the gross profit. If you have a doubt, please ask. Yeah. Yeah.
Yes, sir.
Right, very good. And please try activity number 1 and calculate how much is the cost of goods to be sold, cost of sales, and gross profit. Please try and use the template. Everyone, please try. Okay. Do sales. Sales, I put it all together 200,000. And the opening stocks 50,000. Opening stocks minus 18,000. And purchases, all together, cash purchases, credit purchases 100 and 120. Loading expenses 6,000. And this is 7,000. Take the total. Take that into here. The answer is 70,000. Gross profit is 70,000. Everyone got the answer? Are they?
Yes, sir.
Good. Got it? Okay, next write down topic, calculation of net profit. Right. So write it down. Net profit is the difference between net profit equal, write it down, net profit equal gross profit plus other income minus expenses. Gross profit equal, sorry, net profit equal gross profit plus other income minus expenses. And then write it down other income. Other income කියලා කියන්නේ main business operation එකට අමතරව if they have any assets, they can rent them out. If they have any fixed deposit, they will get interest income. And මේ වගේ different sources තියෙනවා. Okay, write it down. Interest income, rent income, dividend income. You have done yes, in your maths you have a topic called share market. Share market means you invest shares in share market. So by investing shares, you derive capital gain and dividend income. And then you have discount received. ඒ ටික add කරන්න. Commission income. There is another one called commission income. If you work as an agent, you derive commission income. Can you try activity number 2, everyone? Can you try activity number 2? Finished? You need to calculate the gross profit, sales minus cost of sales. Sales is the summation of both credit and cash sales. Cost of sales is 52,000. Gross profit here. Other income, dividend, rent income, discount received, interest income. Clear? Jadi hari.
Yes, sir.
Good. Can someone read the calculation of net profit? Vihanga, can you read calculation of net profit part?
Yes, sir. When the gross profit or loss is calculated, the net profit or loss should also be calculated. The details of the accounting elements, income and expenses that are used in preparing the profit or loss statement are given below. Income. Increase in equity other than the introduction of capital by owners is known as income. All other income earned not included in the gross profit is regarded as the other income. Some examples of other income include the following. Example, interest income earned by depositing the excess cash, the rent income earned by renting a section of the office building, dividend income earned through purchasing shares of public companies, discount received, commission income received, etc. In calculating the relevant net profit or loss of a business organization, all the above income should be considered.
Please write down topic, definition of income, increase in equity other than the contribution by the owners. Write this down. Income, increase in equity other than contribution by the owners. And then write it down, expenses, decrease in equity, opposite of income, okay? Decrease in equity other than the drawings by the owners. Decrease in equity other than the drawings by the owners. These expenses can be classified into Number one, distribution expenses. Administration expenses. Number two, other expenses and financial expenses. Clear? Then write it down. Topic, distribution expenses. Expenses incurred for selling and distribution of goods. Expenses incurred for selling and distribution of goods. Just copy the examples. Advertising expenses, salaries to sales staff, bad debts, discount received, discount allowed, my mistake, discount allowed, depreciation of delivery vehicles or motor vehicles, sales commission. Advertising, sales promotion, salaries to sales staff, bad debts, discount allowed, depreciation of delivery vehicles or motor vehicles that is used for delivery purpose, and sales commission. And then write it down, administration expenses. Administration expenses. These are expenses incurred for admin purpose. These are expenses incurred for administration purpose. Example, rent, insurance, stationery, depreciation of administration related assets, basically buildings, computer equipments, those type of things, depreciation, repairs, electricity, and whatever equipment depreciation. Next, write down financial expenses. Financial expenses. Expenses incurred for borrowing funds and maintaining bank accounts. Interest on bank loan, interest on overdraft, bank charges. ඒටිකෙන්. ඒ තුනටම නැතිව දාන්නේ මොකද්ද? Other expenses. Write it down, other expenses. Anything which cannot be categorized for above 3 expenses, 3 type of expenses will be recorded there. Loss from cash frauds, losses from fire, stock donations. Stock donations. Sorry, then activity 3 කරන්න හැමෝම. Classify them under correct heading. Please try. I'll give you 5 minutes. Please try. Tell us one by one. Asali, can you read left-hand side items? Tell me which items goes to which category. Yeah.
Bad debts, distribution expenses,
Okay, good.
advertising expenses, distribution expenses.
Yeah.
Salaries for sales personnel, also distribution expenses.
Yeah.
And interest expenses for bank loans, finance expenses. Electricity expenses, administration expenses.
Yeah.
And discount allowed, distribution expenses.
Thanks a lot. Yeah, good. Sarah, can you tell me the another part? Starting from distribution of vehicle, depreciation of distribution vehicle.
Depreciation of the distribution vehicles goes to distribution expenses, stationery expenses to administration expenses, insurance expenses to also to administration expenses, bank charges to financial expenses, rent payments to administration expenses, losses from cash frauds to other expenses.
Bank charges, rent. So everyone okay with that? Classifications clear? Everyone, is there any doubts? You can ask. Right. So, so in this example, just go through how you record them. So in that case, you have 3 columns. So gross profit is basically sales minus cost of sales, and you have other income. Other income you take into the second column. Discount received, investment income, interest income. And then you have expenses, various type of expenses, distribution expenses, admin expenses, other expenses, finance expenses. You put it in the correct heading. Expenses for sales promotion, salaries for sales staff or salesperson. And admin expenses, insurance expenses, salaries, administration, building repair expenses. Losses due to cash frauds, other expenses, interest on bank loan, 12,000. Then what you do is you take the totals and put it into the second column. Distribution expenses 54, admin 93, other 8, finance 12. And after that, what do? You add gross profit and other income total. You don't give any definition. So basically it's 255. That put it in the third column. And you take the total of all the expenses, namely distribution, admin, other, finance, and put it in the third column. And the difference you transfer to capital account. That is net profit transferred to the capital account. You don't need to write, just get an idea how you prepare the profit or loss statement. And the format is business of whoever, Mr. Yasindu or whatever, business of Yasapala or whatever. Profit and loss statement for the year end. This part is crucial. For the year end. Start with sales, cost of sales, opening stocks, purchases, loading expenses, carriage inward expenses. The answer is called cost of goods to be sold. Then less closing, and then you come up with the cost of sales. Sales minus cost of sales, gross profit. Then you have other income categories, rent income, interest income, and dividend received. And you have expenses, distribution expenses, advertising, salaries to sales personnel, discount given, bad debts, distribution. Yeah. And then you have administration expenses. So just go through them. I'll give you 5 minutes time. Just go through them and then we'll do a question. Just familiarize with the idea. Everyone clear? This is all about profit or loss. And they have given example. So see, the example is given. So the figures, how you put it into this, under what category? Just familiarize yourself with the idea. Anything not clear, please ask. And don't go for this format. This is kind of an old format. We learn to this. This is the kind of a new thing, added to the new segments. You have a doubt, please ask. Here the structure template එක හොකේද? Okay. So now shall we do activity 4? We'll do activity 4. Just draw the template. Just draw the template. Structure කැඳගන්න හැමෝම sales, cost of sales, opening stocks, purchases, carriage inwards, then total එක තියලා you write it down, cost of goods to be sold. ඊට පස්සේ less closing stocks, gross profit, other income, distribution expenses, leave some space, admin expenses, leave some space, finance expenses, net profit transfer to the capital. It gets structure karega, leave some space. Huh? Class monitors, you need to mark your attendance, your specific for your class, and send it to me. අපි කරගත්තද ඔක්කොම ටික හරිද ස්ට්‍රක්චර් එක? distribution එකට leave normally exam එකේදී O levels වලදී 5 lines තියන that's more than enough. Admin 5 lines. Finance 2 lines. Other highly unlikely you will get it. Sometimes you will get it, but in exam highly unlikely. හරිද? I'll finish your syllabus by the end of July, okay? Hopefully. හරිද? template එක හරිද? structure එක? Shall we start or no? ඉඳගත්තද ඔක්කොම කට්ටිය කොහමද? Vihanga's anything finished? Still
Yes.
drawing? Structure kita kan dengan istilah sales, cost of sales, leave some space, closing stocks, gross profit, other income, distribution expenses, admin expenses, finance expenses, net transfer. හරිද? Or still you need more time, is it? Capital එක එන්නේ නැහැ. Sales 650. Please write them down. That one, third column. Discount received, other income. Second column. Bank loan is a liability. Remember this one, for the profit and loss, you only consider revenue items and expense items. That's all. Stock asset first, Jan, opening stocks, second column. 80,000. Sorry, 15,000, I missed. 15,000. Commission income, other income. Carriage inwards, cost of sales calculation, 6,000. Purchases, 200,000. %, fixed deposit is an asset. Insurance, admin. Fixed deposit, income, other income. Then a column make it in item. Left column make it in items. If you have a doubt, please ask. So you only consider revenue and expense items. You only consider revenue and expense items. Done? Okay. Next, other column, discount given. First column, 5,000. Bad debts, 9,000. Administrative salaries. Salaries. First column, this should be first column. 40,000. Sales promotion. Sales promotion, 60,000. Interest expense on bank loan. Bank charges. Trade data is an asset, building is an asset, stationery. Cash is an asset, other expense other. Losses from cash frauds. Then calculate the, there's no closing stocks, so you just leave it. So it says all the cost goods purchased have been sold. So there is no closing stock because of that reason. So cost of goods to be sold. Okay. If I do, you just copy me. Cost of sales calculate karanna. Gross profit calculate karanna. Other income total karanna. Gross profit plus other income, take it that into the third column and take all the additions of each individual items, distribution, admin, other, and finance, put it in the second column, and then take all the values to the third columns and calculate the profit. I'll give you 5 minutes time. Please try. What is gross profit? You got these answers? Please do check. The and all the expenses. The difference between gross profit plus other income and total expenses is on net profit. Correct or wrong? Is it clear?
Yes.
If you have doubt, please ask. Okay. Is it clear, that part? Okay. Rehara Binoli, can you start statement of financial position? Can you read that? A minute. Can you read?
Preparing the income statement, the trial balance is only left with the balances of the accounts of assets, liabilities, and equity. Statement that is prepared to include the balances of assets, liabilities, and equity is called the statement of financial position. This is also was called as the balance sheet in the past. This shows the business organization's financial strength and ability. The information given in the statement of financial position will be helpful for the economic decision making of the stakeholders of the organization like owners, creditors, and financial institutions.
Right. Risandi Jayavira, can you read the elements part, elements of financial position? or Sandisa, Sandinsa.
The elements of the financial position. As at a particular date, the assets, liabilities, and equity the combined process can also be expressed by the accounting equation which has been already discussed. The accounting equation can be depicted as follows. Assets equal equity plus liabilities. The values summarized for the assets, liabilities, and equity are shown in the statement of financial position on a rational basis. The statement of financial position includes three main elements: assets, equity, liabilities.
Continue. All right. So right on topic, statement of financial position. This reflects assets, equity and liability position. As at a given date. As at a given date. Also, this represents the basic accounting equation. Also, this represents the basic accounting equation. Assets equal equity plus liabilities. Assets equal equity plus liabilities. Write this down. Asset is a resource. Asset is a resource controlled by the business. Controlled by the business as a result of past transaction from which future economic benefits are expected to flow to the business. Expected to flow to the business. So we have learned in the grade 10 the basic introductory part. Assets has two components, current and non-current assets. Current assets are assets which are going to convert into cash in the near financial year. And non-current assets are assets that you are going to use in the business. You don't have any intention to sell. So may structure KD, what you do is you present your assets in two forms. One is non-current assets and current assets. So non-current assets assets that you are going to use in the business. You don't have any intention to sell. So they are broadly land and building, furniture, machinery, motor vehicles. And if you have any investment or deposits which mature more than one accounting year, fixed deposit, that also come under non-current assets. And current assets, you have your stocks, you have your debtors, and fixed deposits matured within 1 year, cash at bank, and cash in hand. And you come up with the total assets. Is it clear? So assets jati dekai, current and non-current. So you need to put it under proper heading. Right? And these assets of the business are presented in the order of liquidity. So please do highlight in your textbooks. in the order of liquidity in a statement of financial position. The ability to convert the assets into cash with a minimum loss in a short period of time is defined as a liquidity. These assets with less liquidity are shown first. That's why the land will come first. Okay. Can you try activity number 5? Please try. Categorize categorize karanna under current and non-current in the extract of SOFP. Please try. Take the total of non-current assets. Take the total of current assets. Edika total karla. Total assets done. Everyone. Please try. Done? Okay. So machinery, furniture, motor vehicle will come under non-current assets. And stocks, debtors, income receivable, cash at bank, cash in hand will come under current assets. Is it clear, everyone? So we'll wind up the class today. So we have done the most important area that will be tested for your O levels. So there is a 8-mark question will come for your part 2, and you will get 7 marks for your part 1 for this one. Okay, so it's very important one. So 15 marks you can score out of 100 from this area. So starting from this and the next chapter, the adjustment part. Right? So you should not miss this part. Very important. Okay, and stay safe, and probably I think they might arrange a class on next week. So please do participate. So this is the most important topics that we are doing right at the moment. Okay, and see you next time. Yeah, bye.
Thank you, sir.
Thank you, sir.
Welcome.
Thank you, sir.
Welcome.
Thank you.